Well, it finally happened. Interest rates yesterday going up by 0.25%. I want to talk to first home buyers today because after speaking to a few of you yesterday after the rate rise, there seems to be a little bit of confusion about what's going to happen from here. I want to give you a bit of insight and also some ideas and tips that you can use while you're out there looking for your first home. Let's get into it. So yesterday, as soon as the RBA announced the increase, I got on the phone to 15 home buyers that I know are buying their first home in the next 2 to 3 months. And I asked them for feedback about what it meant for them. And I was quite surprised in the feedback that I got, in that everyone seems to believe that they're going to be buying 10 to 15% more house for their money, which in reality just isn't true. While prices may go through some retraction here, it's going to make it very difficult for banks to be able to loan you the same amount of money that they were loaning you before. And that's a key thing. So my first tip to first home buyers is go back and revisit your finance and take a look at what your bank will approve you to. And that's not the amount you need to take as a full loan. I think you need to build in some buffer here about, if prior to this you were sort of going for the maximum loan you could possibly get and going out and finding a house, I would be looking at reducing that by 25%. And what that's going to mean for a lot of first home buyers is you're no longer buying houses, but you're looking at units. And I think that that's an exciting thing because, yes, I understand you've got to pay strata fees and, not as attractive for a capital gain or a capital investment going up. But look, I think the important thing here is you become a first home buyer in any way that you possibly can, especially with all these inflationary pressures around. I mean, there is so much increasing in price, and I certainly feel it when I go down to the shopping center and I'm buying groceries for the week. Our money is buying less and less, and there's two things. You don't want to leave that money sitting in the bank for sure, and you also want to make sure that you're taking all of these new inflationary pressures into account when you're deciding on how much money you can afford to borrow. So I think, it's going to take some time for the RBA to wind interest rates up to 2.5%, which is, where they say they're predicting it's going to go. I think that you are better to still, now is not the time for a first home buyer to sit on their bum and do nothing. Now's the time actually to stand up and be counted. And if you can make a smart decision here and purchase a property that you can easily afford, then you are going to benefit. And I'm not saying you're going to make heaps of money, but we have this very unique situation where we've got a lot of investors who have sold their properties, a lot of new investors have bought those properties, and we've got green investors that really need good returns on their money. And if you're a green investor and all of a sudden interest rates are going up, then you need to recover that money. So rents need to go in line. So I guess bring that back to being a first home buyer is that, you've always heard that rent money is dead money. I think that what we're going to find is there's going to be increasing pressure on prices. And as a first home buyer, you want to get out of that market completely. You want to be a first home buyer at any level. And while you might not get the capital returns today, you are going to have a fair crack at not only owning your own home, but paying down your debt as quickly as you can. I hope this has helped you today. Look, if you do like these videos, please like and subscribe to my channel. Take care, and I'll speak to you soon.